Good afternoon. Nader Goudarzi, Blue Cedar Capital Limited, 5th of January 2022. I'd like to share with you my thoughts for the coming year of 2022. I'll just give you a summary of my thoughts and then maybe give you a little bit of color on the thoughts themselves. I do see the US market performing and continuing to perform. Despite the concerns about ongoing inflation and the increase in US government treasury yields and the reduction of quantitative easing by the Federal Reserve. Technology stocks will continue to do well. The NASDAQ index will in all likelihood breach 19,000. Yes, tech has come a long way, but I do believe we're simply at the beginning of the technological revolution. More about that later. The Dow Jones index also, I believe, may even touch 40,000, and the S&P 500 may see 5,700, 5,800. There is a place for gold, even though digital assets are really the focus of investors. Inflation will cause the price of gold to go to $2,000 and even higher. The concern right now is really the focus about the Omicron infections. Yes, the infections are decreasing, but we are now living in a world where we have to face the fact that this particular disease is going to be with us for the foreseeable future. However, the way that the disease is treated by governments needs to be strategic. Right now, the markets are of the belief that we're not going to have further lockdowns, which I agree with. And so we're going to have more of the same that we had last year, although I'm thinking that the performing equities will be the ones that really didn't perform last year, so value stocks will do well. And you may have a broadening of interest in other technology stocks. I'll just mention my favorite technology stocks. Normally I don't mention them, but I do feel that companies like Nvidia, Micron, Google will do well. Apple has performed exceedingly well, but it wouldn't surprise me to touch the $4 trillion market value mark, because as most of you probably know, Apple is buying back its own stock. In the last 8 to 10 years, it has spent $460 billion buying back stock. So you may well see the market cap of Apple continuing to improve, as well as the price of the stock. The price of the stock will probably exceed in growth terms the increase in market cap. There are certain themes that I would like to mention to you that I'm very keen on. The water theme is one that has been a favorite of mine. I believe that water treatment, water stocks, water suppliers, suppliers of equipment for that industry will do very well. So I would position investments in that particular area. I believe the semiconductor sector will do well. So I'm not going to mention stocks in that area. You yourselves can go and do your own research. Also the rare metals, I believe, because they're controlled by one particular country, namely China, rare earth metals are in short supply. The companies that specifically I'm quite keen on are the companies that will venture into battery-powered vehicles. So there's one or two of those in Germany that will do well. There's one particularly that I'm keen on. And I would also be cautious of the currency markets. The US dollar in the first quarter is likely to weaken, even though the US government yields have risen. In the second, third, and fourth quarters, my thinking is that the US dollar may strengthen. The key here is the support level of 95 on the US dollar DXY index. If we're able to hold 95 level, then the dollar will rise again. If not, then we're going to see a further decline of the dollar. Normally, I don't stand really on the fence, but with the dollar, it's a very difficult one to predict. Clearly, asset allocation needs to be broad. You have to invest in tech, you need to have that exposure. The oil sector is going to do, oil companies will do well simply because there hasn't been investment in oil exploration, and therefore there'll be a lack of supply. In the face of a squeeze in supply going forward. So $100 a barrel is my thought for the price of oil. Overall, I am optimistic about the coming year, albeit I see very high levels of volatility. That may certainly cause concern to investors. Interest rates still remain low, and real rates of return, namely the level of interest rates versus the level of inflation, will be below the level of interest rates, and therefore we'll continue to be running an economy with negative real rates of interest. Thank you for listening. I look forward to speaking to you soon.